And with that being said, and without further ado, I'm going to bring in Alexandros. Stick around for Alex. I have an expression with Alex because of the method that he uses, and it says, stay off of his cloud. So Alex is an Ichimoku cloud guy. He's a top gun in the clouds, and thank you so much, Alexandros, for joining me again. It's kind of a reunion. I haven't interviewed you in quite a long time, and have always appreciated your work. Alex, how are you, my trading warrior brother? How's it going?
Hi, everybody. I had an accident today with my laptop, but everything is okay, and I had to set up everything from the start for the interview, but everything is okay now. Thank God we have everything in order. Nothing is going to stop us for this. Okay. I'm very happy.
Yeah, that's the attitude.
Yeah.
So
thank you.
I know you're busy trading the. Oh, okay, buddy. Yeah, it's a, you know, it's definitely you edified. I've watched Alex's charts for years in other trading rooms, and his charts have a great hit rate and very clean looking, not confusing looking. And you know, Alex, I never asked you, how did you end up moving towards the Ichimoku and cloud trading? What was behind, with all the different methodologies out there, for you gravitating towards this style?
Ichimoku Clouds is one of the tools I use in order to find a trade, make a decision about the trade. I also use Elliott waves and classical technical analysis. But the main reason behind Ichimoku Clouds is back when Blake was in his Wise Trade webinars, and Euro USD was at 140. If he remembers, we sold, many people sold Euro at the highs. Blake caught the high of the Euro USD. Back then. And after some time, when I was looking back at Euro USD daily chart using Ichimoku Clouds, you can see how easily one could have stayed. Can you see my chart?
I see it now, yes.
Yes,
okay.
140 is right up here. Once it broke down and fell below the Ichimoku cloud, it never broke up back again until 112. And that's only on the daily chart.
All right, so one of the features that you like about it the most is it keeps you in a runner, it keeps you in a trending trade because it never violates that cloud.
It's a tool that applying it once can give you the trend, resistance and support levels, okay? And it cannot predict the future like Elliott waves can, or the turning points. But it's very useful, and I always use it on my charts. For example, today, Euro USD, like Stelio said, is breaking down, has broken the upside channel. The bearish divergence signs are working, and the USD is lower. However, I'm not chasing it. I'm not going to sell it because I find critical support from the Ichimoku cloud on the daily chart here at 117.35. Okay.
Okay. So do you wait for the reaction off the cloud to possibly probe along, or do you just go with it? Okay, so you want to see a good candle off the cloud to go the other way.
I like to sell, but not in this case. Okay. I prefer to sell a chart when it breaks below the cloud. Okay. Or at least I have given a lower high, so my stop can be put on the last high. However, in this case, using also my other tools, I do not believe Euro USD is starting a breakdown towards 114, 115. I believe it will come back towards 121, 122.
Okay, and you think and the top of the cloud is about eyeballing at 117, that's going to be a region where you might be looking for weakness to be rejected and possibly put in a good candle.
Correct. Correct.
Okay.
I have seen that clouds in the 4-hour chart and in the daily chart provide the most trustworthy signals, support and resistance levels.
Okay, that's it, Pearl.
So if I see on the 4-hour chart a break back above the Ichimoku cloud, it will be a good sign for bulls.
Okay.
Moreover, according to my Elliott wave, yes.
Yeah, can you describe, go back to the last chart for people that aren't familiar with clouds? They're going to ask one more chart where it shows it coming into support around 117. The Euro chart, I think it was a 4-hour chart you were showing, or maybe it was a daily.
This is the daily chart where the cloud support is at 117.15.
Okay, but the cloud.
However, yes.
Go ahead. Yeah,
however, these two indicators and this one provide support and resistance levels. For example, this one is a price movement in the past, shows that support is being tested right now. This is the price right now, but in the past. This shows that this is a support area because the price levels where price action was moving sideways here.
Right.
And this is a support area, okay? If it comes back up, the first resistance I want to see broken on a daily basis are these two lines.
What are those?
These are the 10-cut and the Kijun.
Okay.
The
question I have, Alex, the question I have, and it's for me as much. Okay, keep it there. So say we pull back to the top of the cloud about 117. Mm-hmm. Okay, so the cloud starts at 117, but it goes all the way down to the red line underneath the beginning of the cloud, at the end of the cloud. Is that the line in the sand for a bullish outlook that it cannot take out? It could go into the cloud, right?
Of course. Entering the cloud, we say that it has become a neutral on a daily basis because this is a daily chart.
Okay.
As long as price is above the cloud, trend is bullish.
Got you. All right. And the red line underneath the cloud, what's that called?
We have to.
Okay. All right.
No, it's just the cloud body. So if price is broken below the cloud, then we have very strength.
Well, you know, it's always sunny in Southern California.
The red line.
Yeah, all right. So now we understand a little bit about the clouds, and your view is that the daily is still positive until we close underneath the clouds, and then it would just shift to neutral.
Yes, I do not believe we will break below the cloud or in the cloud because already I have seen that the decline has a corrective form in Elliott waves, and I believe we have already reached the same.
Okay, so you know that's a great level because we have a lot of people short euro. All right, so people that are short euro and you're looking at Alex's cloud coming in around 1720, that'd be a great place to book it and at minimum have. All right, go ahead, bro.
Okay, first let me say something else. There are a lot of tools out there that one can use because many people hear us, others have many years of experience, others are very new to it. There is, as you know it, and you have said it many times, there is not a single tool that will make you money on the stock market, apart from hard work, consistency, and discipline on the plan you've got. So, regarding the tools, I believe they are like suits. My suit cannot look good on you or someone else because I have a different body type. It's like the tools I use for trading. The tools I use are for my personality and are good for me. Someone else might use other tools. I do not criticize any other tools. I have received a lot of criticism by people about Elliott wave theory, although I'm still learning about it, and I try to use it as best as I can. It's a difficult theory to apply and to learn.
Yes, Elliott analysts, they can get quite vocal about, oh, that's a terrible count. Oh, that's the wrong count. When there are many counts.
It's a dynamic theory because waves can change as market moves, and scenarios can change. There are a lot of scenarios and alternative scenarios working at the same time, and people, new traders do not really understand how the dynamic of the market works, and things can change from one moment to the other, and the trends can change on a blink of an eye. So we have to adapt for the market and not stay bullish euro forever or bearish euro forever. We have to adapt. If you do not adapt on the markets, you die. You lose everything. That's my view.
Every day you're continually assessing new information that's coming to you through price.
Correct. Okay. I do not believe there is a better indicator of what the market thinks from price. Price and the price movement is the best indicator we have about what's going on, because it's also a discounting factor, okay?
Yes.
Everyone was expecting euro to go to parity around 105, around 106.
Yes.
Why?
You weren't. You were in my room. I remember.
You remember. Everyone did not see the higher highs and higher lows that euro was started making.
Right.
Anyway, you also know that I have been a bullish in gold since it was below
a long time ago.
$1,100, okay?
Yeah. Are you still?
Gold. Yes, I still believe gold is heading towards 1,400 and higher. And currently gold is backtesting the breakout of the bearish channel that it was in for the last few days.
Yeah, I saw you tweet that breakout. Okay, so you, even though it's beneath the cloud on your 4-hour, your bias is going to override.
Did you see the rejection here?
Yes. Yes.
Do you see the rejection here? That is
right,
also the same level.
Right, at the bottom of the cloud. Right. Yes. Right.
The boundaries of the cloud are resistance levels now. If we enter the cloud, the next resistance level will be the upper boundary.
Okay. So your bias overrules what you would do with the clouds right now, because we are underneath the cloud. But I bet if you go to a weekly, we're way above the clouds on a longer time frame, and maybe your long-term bias is, huh?
This is the daily chart. It all depends on the risk profile one has.
Okay.
This one? No, this is daily.
Okay.
This is the 4-hour chart.
Oh, right.
Okay. This is the daily chart.
Okay. Yeah, way above the cloud.
It's way above the cloud. We have been rejected by the Tenkan-sen, the resistance here.
Yes.
Okay, and if we lose 1288, we are going to hit 1277 at least.
Okay.
If not 1260.
Okay.
However, if we break above 1316, I believe we are heading towards my target here, 1400, 1450.
And what was it, a measured move, an Elliott count? What gives you the, and I know you've been talking 1500 for a while, what led you to that target?
First of all, it's the extension, the equal leg of the first move in gold. The first move from the lows in November 15.
Yeah, from 1050 to wherever it went. Okay.
To 1375 after the elections.
Okay.
I believe at least an equal leg up will follow, and the target is 1450.
Okay. Nice look.
Okay.
All right. What else is on your radar? I saw a tweet that you had in the yen last week that actually you were talking about something
I was talking about, yes, here, up here, we're seeing triple divergence, the three pattern you taught me.
Okay.
Okay. Now, USD yen is making lower lows and lower highs on the 4-hour chart. So as long as price is below these highs here,
we're still, okay, I'm waiting for
we can still make a sharp decline lower. I'm bearish dollar yen, looking for a move much lower.
Do you have a chart on that? Because I'm still looking at the gold.
Truth?
Yes. We're still
I have seen charts.
Okay. Because that's very important.
I'm now seeing dollar yen?
No, I still see the XAU USD. Yeah, still looking at XAU. Okay, now we're looking at the yen.
Okay, now you're looking at the yen. Here is the 4-hour chart where I have seen the 3-drive pattern with the bearish divergence, lower lows, lower highs. I do not want to see it breaking above this level.
Okay.
112.55. Okay, and I want to see today's low being broken. For my bearish view, come towards 104.
Okay.
We're at least 110 at first, then a bounce, and then back down.
Okay. What else is on your radar, buddy? That you want to share?
Natural gas is on my radar.
Okay.
Many commodities react very well to technicals and respect technical rules. They're not as easily manipulated as some indices. And I believe the natural gas here is a great opportunity to buy with a low risk. I expect it to at least go towards 330.
Okay. And this is based upon cloud support. It's either good or bad from here.
It's based on all of my techniques, also clouds, Elliott waves, and last but not least, because it goes with gold, is the Australian dollar. I'm a big bull here also. The Australian dollar has broken out of a triangle pattern, and I expect it to move at least towards 0.85.
Okay, and that breakout was where again? And we're in the clouds right now, just a little temporary pullback. Breakout was what, about 78?
The breakout was
ascending triangle breakout.
Yes, at 78, yes.
Okay.
We're now probably back testing the breakout, and I expect, because AUD USD is usually lagging behind gold, and as I expect gold to rise also, I expect it to follow back upside.
So you're like me. I get people, argue with me about using Aussie and gold as a correlation. They say it should be more like copper or industrial metals, but I've seen gold and Aussie move together just at different times. So you're a believer in that correlation.
I am, but I usually try to avoid correlations, like USD CAD and oil has fooled us many times, and that is why I try to look each product, each pair separately.
Okay, since you brought up USD CAD, you have a view on it? Because oil's looking pretty good. Probably could pull back here, but we're also into some resistance in USD CAD. I'm wondering where your clouds are at, maybe on a daily for a position short in CAD.
Yes, on a daily we're hitting now the Kaijun Sen. We're at resistance right now. A daily close above 123.70, 60 can bring us back to 126. However, I do not believe so, that this can happen, to tell you the truth. I believe we will sooner see a decline in the USD CAD. However, a trend remains bullish here.
Right.
Higher highs, higher lows. It's as simple as that for me, because I try not to overcomplicate my analysis. Whenever I can create a channel and see higher highs and higher lows, I try to respect it, because this is how it is in the 4 hour above the cloud.
Right.
It's in the short term. We can be at the pattern may go in waveform, but it doesn't matter.
How about the 4 hour? How about the 4 hour on Canada here, Alex? Maybe the clouds come in a little lower than 26. Maybe they come in around 25 or so. You have a 4 hour on that with the clouds.
We are right.
And while we're going, and while we're beginning to wrap things up, the best way for people to follow you, you have a website at Trade Today. Is that correct? www.tradetoday.com. And Twitter handle is at Alexandros Yfantis, and that's spelled with a Y in front of the, huh?
Another Y.
Right. Don't forget the Y. Don't forget the Y. All right. So we're breaking up a little bit on the audio with you, Alex. Anything you want to wrap it with?
Oh, thank you for the opportunity. Doing excellent. Traders,
Okay, Alex. I want to thank you so much for sharing your views and talking about a method that I don't see that much in our room, and for traders in our community to consider taking a look at this and experimenting with this. And you will always be my trading warrior brother, and I hope for nothing but pips to rain down on you during this trading season in the fall. And thanks again, Alex, for being here. Appreciate it. And I'll be tweeting our interview a little later in the session. So everyone, thank Alexandros for being with us today. As I said, you don't have to be, beware of Greeks bearing gifts when you have guys like Alexandros Yfantis, Stelios Kontis, and Stelios Volgardis with us. So thank you very much, my trading warrior brother. Hope everyone had a good turnaround Tuesday. Enjoy the rest of the day. Remember, if you want to be part of our trading room, to sign up, because after I say goodbye to everybody, that's still going to be an ongoing thing with an exchange of ideas. So until tomorrow, everyone, don't just count your pips, count your blessings. Adios, and see you tomorrow. Thank you again, Alex.
Thank you, Dale. Bye.
Bye-bye.